Hello and welcome to this special convening of the Coalition to Advance Arkansas Entrepreneurship. My name is Tiffany Henry. I'm the Director of Entrepreneurial Communities at The Conductor. At The Conductor, we are a public-private partnership located in Conway, Arkansas. Our mission is to empower and inspire innovators, entrepreneurs, and makers. We do that a couple of different ways, primarily through no-cost coaching and consulting, community engagement activities like this, and conversations with subject matter experts. And so this coalition gets together about once a month where we talk with people that are making an impact in the field of entrepreneurship and small business. And I cannot think of an organization that makes a bigger impact in entrepreneurship than the U.S. Securities and Exchange Commission. So we have two leaders from that organization here to talk with us that I am thrilled to introduce. So the first person we have with us is Commissioner Elad Roisman. He was appointed by President Donald Trump to the U.S. Securities and Exchange Commission and was sworn into office on September 11th, 2018. Then we also have Director Martha Miller here with us. She was named the U.S. Securities and Exchange Commission's first director for the Office of the Advocate for Small Business Capital Formation in December 2018. So Commissioner Roisman and Director Miller, thank you and welcome.
Thank you. We are glad to be here.
Thanks so much.
So if you guys wouldn't mind to each just share a little bit about your roles and your office and really what is the SEC.
Yeah. Happy to do that. And I thought, Alad and I talked a little bit beforehand, and I'm going by first names. Please call me Martha instead of Director Miller today. And I can probably speak for Alad that he would prefer to just be Alad as opposed to Commissioner Roisman. Does that sound good to you?
That sounds perfect.
Before we dive into, and I'm happy to do it in whatever order, Tiffany, you think works. Before we dive into the kind of the nitty gritty of what we're doing and who we are, would love to learn about those that have joined us today and that are in the room. Would that work for you, Tiffany?
Absolutely.
Okay. So I would love for those who are here, if you want to turn your cameras off and join in the conversation, you're welcome to. If you want to just unmute, that works as well. I think most folks are working from home and debatably business casual attire most days. But we want to hear from you and who you are. Would love to know what your company or role is in the entrepreneurial ecosystem and if you've raised capital. And feel free to give it as a super brief intro. I can riff on a famous founder and now investor and say, my name is Ben Horowitz. I founded Netscape in the 1990s, raised a bunch of capital, and now I'm a venture investor. So, Alad, would you like to give your version of the short intro?
Sure. Hi, everyone. Thanks for having me. My name is Elad Roisman. I'm a commissioner here at the United States Securities and Exchange Commission. I'm a dad, two young girls, and I'm thrilled to be here and really excited for the opportunity. So thanks again, Tiffany, for the invitation.
Awesome. I'll give my riff on it as well. But I'm Martha Miller. I am the director of the SEC's office with the longest title, but we are most importantly focused on access to capital for emerging businesses. And it is a pleasure to be with a fellow A-State. I am from Alabama, and I am also a new mom while we're on the kind of fun fact kick. Would love for any attendees to introduce themselves so we can get to know you as well.
I'll hop in and continue the new parent role. I'm a new dad. We have an 8-month-old son at home. Nice. Anyway, I'm James Bell. I'm the Vice President of Economic Development at the Greater Bentonville Area Chamber of Commerce, where in my role, I get to recruit global companies, the workers that power them, entrepreneurs and remote workers, so that we're fueling the 21st century economy of Bentonville. And to the question of whether I've raised capital, yeah, a couple of times. I don't think anybody got very rich off my companies, but I have had the opportunity to raise capital.
Great.
I'm happy to go.
Jensen, I was going to call on you next. Perfect. Read my mind.
Hi, I'm Jensen Hallett, Director of Impact Capital for Heifer International. So we've started some impact investing into ag businesses that we've started around the world. So we're going to be launching some funds coming up soon. And then locally, I also, I launched Invest for Better. So I am educating women on how to shift their money to impact investing. So that's something that I do on the side outside of Heifer. So I'm excited to be here. Thanks for being here.
Thanks, Jensen. How about you, Shaheen?
Hi, I'm Shaheen Lokanwala. I work at the University of Arkansas in the Office of Entrepreneurship and Innovation, doing some program management stuff there. And relevant to this session, I'm program manager of a report that we're in the middle of collecting data for called the Arkansas Capital Scan. So really interested in the content that we're going to get today.
Thanks, Shaheen. Hey, John Fenley.
Hi, I'm unmuted now. I'm John Fenley. I am trying to start a business incubator, makerspace, and science museum down in Pine Bluff, Arkansas. I moved here from Utah. I'm starting several businesses. I haven't raised any capital yet. I'm just funding everything myself. And I changed my name to NEM is a crypto scam because I was an early stakeholder, initial stakeholder in a cryptocurrency called NEM, which scammed over 1,100 of their initial stakeholders out of coins that are worth today to about $1.4 million per stake. And the holders of this coin are currently holding about $1 billion of ill-gotten crypto that they are funneling through into an ICO that they're planning on launching in the next 2 weeks. So
Yikes.
I thought I should let you guys know, if you're not already investigating these people, you need to, because it's the biggest, most open, blatant scam I've ever seen.
Thank you, John. Grace.
Thank you for flagging that.
Yep, thank you.
Yeah, so my name is Grace Rains. I get to work with Tiffany at the Conductor, but the other hat that I get to wear, and really the hat that I'm wearing today, is that I'm also the executive director of the Archangel Alliance, which is an angel group here in the Arkansas area. We're the only active angel group. We got started a little over a year ago. And so the answer to the question is no, I have not raised capital, but I'm helping others raise capital and hopefully helping others invest in Arkansas. And I'll actually throw it to Elise because she tacks on to that and is part of our group as well. So.
Oh, thanks, Grace. So I'm board chair of the Arkansas Angel Alliance, which means I get to work with Grace a lot, which is one of my favorite things about it. I'm also founder of Isaac AI, which does due diligence with the kicker of AI on the side. And just for fun, like I had not enough to do, some friends and I recently launched the Legit Chicks podcast. And I don't know who's next.
Well, I won't call on anyone else since your cameras are off, but I am going to do an awkward 5-second pause in case you want to jump in and introduce yourself.
Hi, everyone. Hi, Tiffany and all of you. My name is Karen Zucardi. I work at Windrock International. I work very closely with James and Tiffany and the Conductor in entrepreneurship. I'm also in my side gig, if you will. I am the chair of the Little Rock Sustainability Commission, and so I'm very passionate about impact investment and opportunities for undeserved, how to create opportunities for undeserved communities. And I'm very excited to be here. Thanks for the opportunity.
Well, if anyone has not had the opportunity to jump in, the chat is open and ready for you. So please feel free to put your information in the chat so we can learn a little bit more about you. And with that, I'll turn it back over to my pal Martha.
All right. This is a fun one. We're going to go back and forth. We want this to be interactive. If you have anything and want to weigh in, wave your virtual hand and flag it, or feel free to chat a question into the box. But I'm going to open it up with some questions, and Alad will ask me some back and forth just to kind of give you a flavor of who we are and what we are doing and why you tuned in today to talk to us. So I'll start out. Alad, will you start out by giving a little bit of background on the commission? We know that Arkansas, at least University of Arkansas, is in the SEC, which is the best football conference. As someone who is a big SEC fan, but can you share a few highlights about the other SEC where we serve?
Sure, and thanks for having me, Martha, or thanks again, Tiffany, and thanks for this. Before we go on, Martha and I will just do a standard disclaimer, which our views are our own and don't necessarily represent that of the commission or our fellow commissioners or the staff. And the reason we do is sometimes when government officials have to speak, people think that we speak on behalf of the government, but today we're just talking about our own views. So first of all, I agree with you about the SEC. One of my favorite messages I received since I became a commissioner, I remember this. Someone said, "Dear Commissioner Roisman, I realize that you're a new SEC commissioner, but please kick Georgia out of the SEC." And I still remember this, and I was thinking, I'm glad nobody in Washington has that power. So our SEC is a little bit different. We're the United States Securities and Exchange Commission. We were founded in 1934 out of the 1929 stock market crash. It's 4,000 people work here. There is a 5-member commission that oversees it. And we're right now at 4. We have one more commissioner who's going to be our new chairman, Gary Gensler, who's going to go through the confirmation process and probably be with us relatively soon. And what we primarily do is we look over the securities industry. And we have a 3-part mission. It's protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. And all of these things are intertwined. And I'm happy to go in a little more deeply about what each one means, but I really want to hear from folks today about the last part, the capital formation. And that's where you guys are really an important avenue for us to understand what's happening in the middle of America. I hear a lot, and I believe Martha does too, from both coasts, but we don't hear as much from the middle of the country about what are the needs of businesses and entrepreneurs in terms of their ability to raise capital. And if you take nothing else from today, it's that our doors are open, at least our virtual doors are open, and certainly our phone lines are open. And we would love to continue the conversation because we need to know what are the things that you guys are struggling with, what are the things that are working, and what are the things we can improve upon. But it's really important for us to hear perspectives from folks like yourself. And so please let this conversation continue.
Excellent. All right, I've got another question for you, Alad.
Okay.
So you're appointed to this position. So it's not one that you apply for and you go seek it out like a regular job, but why would you want to be a commissioner? It is a ton of work. I mean, you really, as somebody that is responsible along with the other 4 commissioners for managing our markets and oversight, it's a round the clock job, even though the markets have theoretically limited hours. What brought you here? Tell us a little bit about your story.
Sure, and thanks for that. So, I mean, like all of you, when I was a little kid, I dreamed of being an SEC commissioner. But no, in all seriousness, like I had no idea what an SEC commissioner was till I got out in private practice. And the reality was, I remember this vividly. I was working at the time. I worked at the New York Stock Exchange and the public company that owned it. And I got a phone call from someone who I had worked with in private practice, and he had become an SEC commissioner. And he said, "Hey, I know you're in New York, but how would you like to move down to DC and be a counsel for me and talk to, advise me on the stock trading rules?" And I still remember this conversation because I just started laughing. And I said, "Dan, why would I ever want to do that? Like, Washington's broken and the private sector is fantastic. I love it." And he said, "All right, smart guy, you always say that the rules need to be changed. Why don't you put your money where your mouth is and come down and help me fix it?" And I remember, thinking about it, and I was talking to my wife, and she was like, "You're missing the point. We should do it." And we moved down to DC, and I got to work here in the building, as a counsel, and it was fantastic. It was everything you'd think it would be. You get to interact with public companies, with investors, with regulators, and more importantly, with the people who work here. And everyone is incredibly passionate about the mission of this place. People want the markets to work. People want investors to succeed, and they want companies to succeed. It's infectious, and you really want to do what's best for everybody. And working in a place like that has been, something that, I haven't experienced anywhere else. I truly just kind of treasure it. And because of that, it made me want to come back. And I got asked if I'd be willing to do it, and I said yes. And every day, it's honestly a privilege, and I feel incredibly lucky to have it. So, not a direct path by any means, but one that, I think I feel very fortunate for following. And, I think you've gotten off the hook for a little bit of time. So let me ask you a couple questions.
Okay, sounds good.
So, I first of all, Martha's fantastic. You probably already gleaned that from our conversation, but she has been our first head of a new office. So why don't you talk to people about, what your office does and how folks can interact with you and help inform us.
Yes, so happy to. And I actually recognize a face or two on this from when we have done some prior outreach. So Elise, hello, it is good to see you again. I am thrilled to have the opportunity to talk to you today because it's the best part of the job, which is working to bring your voice into the mix so that when we look at how our capital markets work, we're speaking from the perspective of those that are actually actively using the rules, trying to raise capital, build companies and support companies and invest in those companies. So that is at its core what we do. We were created as a new office with a really long title. Congress was in charge of naming us, so they chose something really catchy, the Office of the Advocate for Small Business Capital Formation. It rolls right off the tongue. But the positive part of that, so the branding doesn't get a passing grade, but the thing that was really great about the creation of our office was it was created through bipartisan legislation. At the end of 2016, signed into law in 2017, and then we stood it up in 2019. And I was asked to come in and to serve as the inaugural advocate and to build the team out. So I started in office with a Post-it note and no computer at that point. So really and truly built it from as much of scratch as you can build something. And had the task of basically building a startup within the government. It was fantastic. I have learned a ton, but the thing that made me want to come in and do something, which you might think, ooh, coming into the government and launching a new office, like that takes a special person to sign up for that. But the thing that sold me was I had been an attorney in private practice, and I had spent so much time working with investors and working with companies, working on these wonderful ideas and trying to bring them to life. And the number of times that I had to be the bearer of bad news and say, like, oh, you can't do that. I'm so sorry. There's actually a line right here and you can't cross it. And I was constantly having to explain to people what they couldn't do. And we'd carve a path to what you can do and try to figure out the right way. But I kept spotting so many issues, particularly as it related to companies in the Southeast that were trying to raise capital. And it's just, as much as we want to call it the Silicon Y'all or the Silicon South or name it something, it just wasn't. There wasn't that level of capital there. We could brand it whatever we wanted, but there were challenges. And so when the invitation came to come and lead an office and to give a voice to those challenges and to try to find real solutions, it was a bit of a no-brainer for me. So that's the story in a nutshell. So happy to answer any further questions if y'all have any about it.
Look, we are so incredibly lucky to have Martha and Julie and the team. She's built an incredible team. It's the envy of any office and certainly in the SEC, but honestly the government. And I really am just thankful for her commitment and her outreach, which is consistent. So again, feel free to continue this conversation afterwards. And another follow-up for Martha, I mean, your team is incredibly focused on helping entrepreneurs and in making the securities law more accessible. And one thing I would recommend is there are great video segments that Martha and her team have put forward on our website to kind of help explain some of the things that we've done recently to enable, I think, and streamline and harmonize some of our rules to make capital raising a lot easier. But it'd be really interesting, I think, for folks to kind of get your perspective on how are most companies getting started with raising their first dollars of capital from investors.
Yeah, so as kind of a brief starting point, and this is something that I think is familiar to most of you given the background that you shared, but typically when companies are looking for their first dollars, they're looking at a combination of maybe friends and family, which is usually a private offering. Sometimes they're looking at angel investors, which would be kind of your wealthier, savvy people that make investments and tend to be strategic advisors as well. Some look at crowdfunding and raising capital on the internet. That's particularly attractive when you don't necessarily have a network of people that you know who to approach. And then others start by looking directly at some of the larger funds, like venture funds that may be locally there or outside of it. And that's looking at the equity capital landscape. There's a lot of other types of capital when you're looking at debt financing and other instruments, but we are particularly focused on the equity piece. And I could go down a rabbit hole on kind of what are the securities laws and when do you need to register versus not have a registered offering. But I have a feeling that what you're here to talk about is really sharing the experiences and where you're looking. And so I am happy to answer any questions that you might have on any of those fronts. And I will also give a little plug. Our team, I think Alad mentioned, is putting videos together. One of the things that we have tried to do from the beginning is to demystify capital raising and to make things more accessible. When the SEC and any government agency for that matter puts out updates to the rules, even rules that are supposed to be helping smaller businesses and their investors, we tend to put it out in like a 250-page PDF in Times New Roman. And you look at it and you think, well, I don't know when, I haven't had time to read a 200-page book in a while, much less read a 200-page PDF to find out if it's applicable to me. So one of the things that our team has pioneered is doing these short video segments explaining what are some of the changes that are happening and whether it's relevant to you so that you can find out if it's in essence, the spine of the book cover for those who still read physical books as opposed to ebooks. But it's that spine so that you know if it's actually something you want to dive into and understand more. But I would love to pause right there if there's anybody that has any questions or wants to see if we can dive into any of those topics on capital raising paths. And certainly we can continue going, but I did want to pause because you've heard a lot from Alad and myself thus far. Yeah, John?
Yeah, hi. So a lot of the work that I've been doing lately with fundraising and stuff has been dealing with people that really don't have many resources at all, homeless people even, that are thinking about trying to use their stimulus to like invest in things or start businesses together. And you mentioned trying to find that pathway to raise money through the friends and family all the way up towards venture capital or things like that. I mean, do you have any guidance, pamphlets, or any kind of thing for people that are just really like 6 or 7 people that are getting together to try to pool their money to do some kind of thing and regulate or give them guidance so that if it does get bigger, they're not just handshake deals or running into problems down the line and really doing things right?
That's a great question. And I appreciate you flagging that because I think that sometimes we have the myth of the entrepreneur, and what a lot of people picture is a guy in a tech ecosystem in a hoodie that has access to a bunch of capital. And that's not most entrepreneurs. That's some. There's definitely that story, but that's not most people's story that I have talked to. And so I appreciate you asking the question of what do you do when you don't have that breadth of network and connections, and how do you even start when, you know, one of the things that we've talked about a lot with our team is how do you start? If you need to raise money, by definition, you probably don't have a bunch of money to pay somebody by the hour to get you up to speed on the laws and to hire a law firm. I mean, that's just not accessible. So what can we do to make things more accessible? So 2 resources that I would point you towards, and to those who are asking that question. One is actually looking at some of the SBA's resources on starting a business. They have actually different business centers that are located in different areas, and they're often a good resource for somebody who's in the very early stages before they're raising capital, that is just trying to learn the ins and outs of tax filings and incorporation. They're a great starting point, and they have resources that don't cost you anything, which is critical if you're right out of the gate. And then the second that I would point you towards is saying, we have a lot of resources on our website. I will be straightforward with you, John. They are written as though you already know the lay of the land. And that's something that we are working on tweaking. We've just actually started a pilot glossary on the website that starts to demystify and cut through the jargon to give you the 1 or 2 sentence definition of key terms of art that you need to know in raising capital, as opposed to the treatise answer that requires you to know all of the lingo, and you're constantly looking the words up that you're supposedly defining. So those are the two things. So one is the kind of the satisfactory, there's a great resources out there at the SBA. And the second one is there are some okay resources that probably don't meet that audience right where they are, but we're working on it. And if you have ideas there, I would love your feedback, because we want things to be accessible. I don't know, Lad, if you have any further thoughts you wanted to share on that point.
No, I think Martha's point is exactly right, which is one, I think we have an entire, we work on the securities aspect of it, but the Small Business Association administrator works on the other half. And it's twofold. I think as Martha put it, we can talk in the jargonese, but that's not really helpful for most people. And so what we're trying to do is essentially kind of make it plain English speak on what are the rules that are the road for people trying to raise capital. Because there are certain exemptions from whether you have to register with us or provide us, certain offerings. And if you trip into it, it causes a whole host of issues. And so what we're trying to do is make it as clear as possible for folks like yourself who are clearly trying to do the right thing and go about it in the right way, how you don't do a football and fall into place. So the most I can say is call us, ask questions, and if we can answer, we're going to answer. And if we can't, we'll give you resources about how we think, to help to address the concerns you have and the questions you have. But it's really helpful for us to hear what you found is valuable on our website and what's not valuable and what you still have questions on, because then we can go back and say, hey, we need to improve upon this, or here's a new initiative we got to start because people are asking questions and it's not easily accessible. So conversations like this, incredibly helpful. And, any other ideas, please continue to share them.
Thank you. I'll look through those resources and let you know what I find there and
thanks.
And how it goes and what questions people still have.
Yeah.
Well, that actually is a good segue for me to ask a question. Alad, can I ask you a question to explain? We've made a lot of important changes in the past few months that are intended to help small businesses raise capital in a less friction-filled environment from investors while still maintaining the important disclosures and investor protections. We could probably do a 3-hour seminar, and that would be a really long event on it. So Can you give the Cliff Notes headlines version of it, Alad, for some of the changes so that the folks that are kind of the leaders in the entrepreneurial ecosystem in Arkansas can make sure that others know about those changes? Because I think that each of you are important conveyors of information to those who are looking to raise capital.
Yeah, that's great. And I'll try to keep it jargon free. So you tell me.
Good luck.
Yeah. So essentially, there's an alphabet soup of exempt offerings we have out there, which means things that you don't necessarily have to register. So there's differences between public companies and private companies, right? Public companies are the things you see on the exchanges. Private companies are, the large companies that decided they don't want to be listed on an exchange right now. And most companies are private companies. They're not necessarily the Airbnbs of the world. They're the small companies that make up your communities and are critical to actually all of our local economies. And so what we've done is we've tried to streamline and harmonize and make it simpler for entrepreneurs to use our offering regime and making it much simpler for people to both understand what are the requirements, but also for investors to get uniform information. And at the same time, we've decided, if you're going to go through this process, it may make sense for us to raise some of the offering limits for some of these offerings for people. So regulation crowdfunding is something people have heard a lot about. We first had it at a cap of $1,007,000. It's now up to 5 million. There's certain Reg D offerings, we go up to 10 million, and Reg A offerings, which are known somewhat as mini IPOs, up to 75 million. So that was a really important exercise by us. And I think I've heard universal praise for it because it makes it simpler for practitioners and people who are trying to raise money for them to understand what are the requirements and essentially move between offerings. Other kind of things that we're really excited about, I'd say, is we've proposed this rule to allow gig workers to get equity compensation, which means stock in your company. So the critical employees in your companies, the people who make your companies successful, have now the opportunity to share in the growth with the other investors in that process. And I think that's a really exciting opportunity for people to literally just feel more ownership in their enterprise. So we have a proposal out there. If you think it's a good idea, come talk to us. We would love to get this passed. And then, quickly, a really important one, which I think is an important incremental step, is we have this rule in place, restriction, where we have something called, retail investors, mom and pop investors, folks like myself, like yourself. And then we have something called accredited investors. And accredited investors include certain institutions, but they also include people who have $1 million in net worth or make over $200,000. And it's $1 million net worth now, excluding your home. And we've had this rule in place for a long period of time, but only recently have we expanded it to look at things other than, how much money you have. Because the way I've always viewed it, just because you have enough money doesn't make you necessarily a good investor or have, the right either risk tolerance or understanding of an investment to participate. And so what we've done is we've permitted now people who have certain FINRA licenses to be qualified as an accredited investor. And then a key piece for me, which I think is important, is we've created this concept of a knowledge-based exam. So people who have certain qualifications and pass certain, either have certain licenses, have passed certain tests, have certain degrees, they should be qualified as an accredited investor, because frankly, if they understand the risks associated with this, they should be able to invest. And so this is an incremental step. It's the first one actually ever. I'd like to do more. So if you have ideas, please come to us about how we can further expand it. But I think that's a really exciting opportunity for us to enable entrepreneurs to find new people who are interested in companies, and honestly, more people to invest in our private markets, which I think are, an unabashed success. So it's a very exciting, I think, innovation, and hopefully one we can build on. That's, a very, very Cliff Notes version. I'm sure I used too much jargon already, but those are things I'm really excited about, what we've done for small business and entrepreneurs.
Can I highlight one other aspect that I think would be of interest, particularly for those who have kind of the university partnerships and the investors? Y'all have, how many of you are involved with demo days in the area? Or pitching events or things where, yeah, okay. I figured I'd see a number of hands go up. That has been something, the number of times, I will never forget. I'll start with a personal story. The first time I went to a demo day, and I was really excited because everybody has their kind of their courtside music of what's their pump up song that they come out to, and they walk out on stage and they tell you all about their company, and they get to the last stage. And right when you think it's going to be the moment where they say like, and we need, $1 million to get to the idea, they just queue up more music and they left. I mean, they basically said, we've got this great company, here's what we're doing. And then they don't tell you anything about what capital they need, but the reason you're in the room is they're raising money, aren't they? Isn't that the point? And part of that is because there was a lack of clarity on what you could do with demo days and whether or not you could actually talk about the capital you were raising without violating rules that relate to what we love to call general solicitation, a lovely jargony term, which basically means talking publicly is the very shorthand version of that. And so we've provided clarity on demo days to make it clear that that is an acceptable way to talk about your company. And you can talk actually about the capital you want to raise, not just about the whiz-bang technology that you have built within certain parameters, and made it really clear what you have to do to comply so that a university could put it on, or a community college, or a local chamber of commerce. We have gone through the process of trying to spell that out. And that's, I think, a really important update for companies to not just have to pitch their product, but also talk about what are their actual financial objectives with the capital raise. So that's a big update. It's one that you might have thought, wait a minute, I didn't know that was something that needed updating. It did, and we finally got to it. So very excited about that update.
No, I think that's a great point, and one where I think it's really going to have a real impact. And I think what we should also stress is that we've done an incredible amount to, I think, help entrepreneurs raise more capital, but we've also done an incredible amount at the same time to ensure and enhance investor protections. And so it's really, I think, a win-win for everybody. And I know I got a question about, I just want to answer in the chat box about where can we find more about these knowledge-based exams for investing? So it's one of those things people need to, no one has actually come in to us with a knowledge-based exam, which we're going to have to essentially approve. So if you have ideas of what a good knowledge-based exam is, find the people who are in charge of that exam, come and tell them to talk to us, because we're really trying to expand this universe. And I really, as I said, like, I think this is a win-win for everyone. And so if you have ideas, definitely come to us. And I know Martha and I have been talking for a while, and we could probably do it for a long time, but honestly, we'd rather hear from you. And so we really, one thing I want to reemphasize is that we really care about capital formation. And I'd love to hear from kind of the unique challenges that you guys have faced in your communities, and what have been some of the successes as well in your ability to raise capital. And I think if I recall, James, you mentioned that you've raised some capital. I'd love to hear from you or others about, what has been like, have you been able to find capital in your community? And if not, where have you gone? And what's been, again, successful or not for you in raising money for your businesses?
So yeah, answering your question, I was not in Bentonville or Arkansas at the time. I was actually in Memphis, and had a couple of medical device companies that I co-founded. And we were fortunate enough to have a couple of local venture capitalists who invested in medical devices. The challenge is, like a lot of the flyover country, there's not a lot of investment money to be spread around. And so what I noticed in that community and in many others is not enough money is invested at a given time. And it's a struggle that we had. Instead of being able to raise enough money to go, say, 18 to 24 months, you could really raise enough money to go 6 to 12, which put the company constantly in fundraising mode, which means that's all the CEO's doing and where a lot of the resources of the company are going. And so, I guess it's the same old horse that we're beating in the flyover country, finding that additional capital, and why things like the angel networks being stood up here are so important.
And I'd like to add to that a little bit. I feel like we're really kind of missing out on an opportunity here to tap into private capital, and particularly around unaccredited investors. And so thinking about, the new option for the exam that you've mentioned, I'm really glad to see that happening. But, I'm not accredited. And I'm leading these groups educating women on how they could invest in their local community. And there's a lot of interest in investing in small local businesses here. And what we're missing is not only the investors, but also some infrastructure. So maybe even intermediaries or funds here that could make that easier. But yeah, I feel like that's really the challenge I come into. I have, there's private investment capital out there, but it's unaccredited often as well. And I feel like that's a really missed opportunity for some of our local businesses, because a lot of the banks have consolidated and they're really looking at bigger opportunities, as well as the VCs that James mentioned. Yeah.
Jensen, go ahead, Alana.
Your insight's gonna be way more valuable. So
I don't know about that. I want to ask a follow-up question, which, Jensen, I think you brought up a really interesting point, which is around the emergence of funds and what sorts of sophisticated investors are in the community. Because one of the things that, if you're an investor in early stage companies, you know that you've got to diversify your portfolio. You can't put everything just in the smaller companies, because it is a risky investment. By its nature, you're investing in a company before it's necessarily a proven quantity. And so I'd love to know, what are you seeing? Are people trying to establish local or regional funds? Are there efforts there? Are they running into roadblocks if they look at it and say, because I will say that's one of the things that we've heard, is that it's really hard to figure out how to build a fund of the right scale that can be impactful. So I'd open it up. I start with you, Jensen, because I think that you will have insights there from the answer you just gave, but I welcome others to weigh in on this. And while you do, I'm going to change the blind because I have light coming. It's right here. It's about to be right here. And then I'm going to be goners for seeing the screen.
I'm feeling the same. What was that?
I said, what a perfect question for Jensen.
I know. I'm like, oh my gosh, I've been working on this challenge for probably 2 years now. And one of the efforts, I think, Martha, I think you can still hear me, but
Oh, yes, I can.
Okay.
Sorry, that's
One
very
of the-
professional of me. This is real life right here.
No, you're fine. So one of the challenges, and you mentioned it spot on, is it's risky to invest. And I know that protecting investors is definitely one of the goals of the SEC. But there are, different structures where funds can really also take in philanthropic dollars. And Arkansas is a very philanthropic state. And so if a fund could be established where it could blend grant dollars, government dollars maybe, as well as private investment, and create kind of a structure of different levels. Did I freeze? No. Okay. You're all just really focused. Okay. Then we could really kind of tap into that and kind of de-risk some of that investment capital. But the biggest challenge is structuring and registering with the SEC and really figuring out how do you incorporate something like that. And I'll say I have been leading a project to try to do something like this that targets women and local and minority owned businesses here in Arkansas. And, there's not a lot of even professional services like legal services that have the experience doing stuff like this locally, even according to our state laws. And see, where was I going with that? Maybe I'll stop there until I can, unless someone else has other things to add. Oh, and I came up, our legal advice was that maybe we should just microfinance, become a nonprofit and do microfinance for local businesses, which is great, but it doesn't open up opportunities for that private investment, because that is then just another nonprofit and it is donation dollars only. So there's no way to help unaccredited investors get involved and engaged and also build wealth while investing in local communities.
That's important perspective. Anybody else have anything else you wanted to weigh in on the kind of fund ecosystem? Yeah, John, that's the only hand I can see. The screen is not showing me everybody at once, so I'm not trying to cut off if there's others on another screen.
I was just going to say, getting the unaccredited investors to be able to take part in the growth of companies is a way to help lift those people up out of the situations they're in sometimes. I mean, keeping them away from being able to invest in things is in a way contributing to inequality.
So this is, Martha, do you mind if I, first of all, thank you everybody. That's been really helpful. And it's something I've heard a lot from. And so look, I'm not an accredited investor myself. I don't qualify under the current rules. And it was always interesting to me that I can pass a rule that, tells people what they can invest, but I don't even qualify for most of this. I can't qualify as an accredited investor right now, even under this new FINRA license series. And I also, I decide enforcement cases when people violate the rules, but it's for stuff that I feel like I'm pretty knowledgeable about. But it's not to say that it's one side or the other. There's legitimate reasons why this system was built, and that's because, to Martha's point, there are risks associated with early stage companies. They have varying success rates, and that's why many people who are professional investors, and especially angels, they invest in a ton of different opportunities and businesses. But the one thing that I've heard consistently since I've been here, and since I've actually touched on this, is like there's real interest in people in supporting their communities and the businesses of their friends, their families, and stuff that they actually have an understanding about what works well in their areas, and frankly some of the technologies that work well and some of the business opportunities. And what I think need to think about here at the Commission is what's a way for us to kind of incorporate that desire for more and more people to be able to invest in this, but at the same time have enough protections or disclosure so people understand the risks. And that to me has always been the right trade-off. I feel comfortable taking on certain risks if I have enough what I call information to make that decision. And so one of the things, as I said, like I know people are very interested in this kind of exam concept is, no one's come up with the exam yet. It's up to us to or up to people to come to us and say, here's a good enough exam for you to meet, for you to qualify as an accredited investor. Or alternatively, people should come and say, like, look, here's a way for us to think about whether it's the fund, Jensen, you were talking about, or others, where we can participate in kind of putting money into our communities, into the business we have. This is a long-standing problem, but it's only going to get worse if we don't actually deal with it. So part of it is like hearing from folks like yourselves here in Washington, like whether it's through Tiffany or others, or through your businesses or other people, and just say like, look, this is a problem that exists today. Help us solve it. And people like Martha have been thinking about this for a long time. But it's always helpful for us to kind of engage with you who are on the ground trying to raise money and trying to like build businesses and fund others. And what are the things that would be the most helpful in the near term? And I am confident that we will get there. It's just going to take time. But that means everybody needs to come in and provide, I think, support for the idea and also ideas for how to achieve it. So rest assured, like we're thinking about it, but this is always energizing for me when I talk to folks about how important this is to you. So as I said in the beginning, don't let this be the only conversation we have. I really, really do want this to continue.
I have a question piggybacking off of this, unless somebody else have a question they want to ask us? I don't want to cut that off. I was going to ask a follow-up, trying to get a sense of for those, and just, this is not a scientifically calibrated number. This is more the heuristic number. I'm curious for those who, if you were a hypothetical company in the Arkansas area and you needed to go out and raise money, how much money do you think you could you raise $1 million, $5 million, $10 million, or is it 100,000, 200,000 before you'd think, man, I have really tapped out and need to go somewhere else, or I've got to call in somebody who's not local, or a large company that might be a potential joint venturer? I'm curious because that may be a question where you say, I'm not sure. But that's one thing that we always want to try to have a sense of, because it's very easy for us to look at what you see if you read any of the kind of news subscription services that are chronicling interesting deals. They're talking about what are very Silicon Valley centric or New York City centric deals that are not it's not the amount of capital that's needed or that's possible to raise in a lot of other areas. So I'm curious to understand a little bit of what is the access to capital, and importantly, where is there a gap where all of a sudden, let's say you have a brilliant company that you want to bring online. I think that James was talking about a medical device company. Where do you kind of tap out locally and realize I've got to go somewhere else to get the funding? Because I think that helps us as we look at the different pathways for capital and we make sure that we understand how they're being used.
I can take an initial stab at that.
So
from just a history of Arkansas capital standpoint, we did it a little bit backwards of how a lot of states do it. So in Arkansas, we've had funds, but we've never had true angel networks. And so in most states, you see that go opposite. You start with an angel network, then you move towards a fund model or a sidecar fund. That's changed a little bit of how our investors in the state approach investing, since they haven't had to be active investors. They've been more passive investors, which is one of the things that the Archangel Alliance is trying to change, create more active investment opportunities. The accredited investor standards do get a little bit in the way of that, in that, Jensen and I have had a lot of conversations around wanting to get more people actively involved in angel investing. Women primarily want to invest from a philanthropic standpoint. And so a lot of, they come from wanting to invest in companies philanthropically. And so we've wanted to look at how do we create a sidecar fund specifically for something like that. But to answer your question, I think, I don't know of a deal that we've looked at that's we give primary focus to Arkansas-based deals. I don't know of any that have only raised capital from Arkansas. So most of the deals that we look at have to pull from out of state. So I don't know that there's any amount of capital that you could raise fully in the state, which is a huge problem. So there's a huge access to capital issue. There's also a gap from a pre-seed seed funding standpoint. So there's that initial pre-seed seed money area is where we see the biggest gap. So, when you look at VC funds, they want a bigger piece of the pie, they want bigger deals, and there's some of those types of groups in Arkansas, but really a company has to get that big before the VC funds out of the state want to take a look at them, but then there's really no money in the state to get them there. So, I would love to hear from others on the call but that's where we're really seeing the gap. And there's some work from a bunch of different groups that are looking at how we bridge that gap. We're one of them, there's others, but would love to hear what others think about that. And if I've hit the nail on the head or not gotten it right at all. Taylor's nodding his head, which makes me feel good. Morgan's nodding her head, but James, you want to jump in, somebody?
I'll jump in since I'm fairly new to Northwest Arkansas and to Bentonville, having gotten here in December and I grew up in Arkansas, for those who don't know, but have been away quite a while, quite a bit of time, and came back. The thing the gap that I see up here is basically where you said, right? It's in pre-seed funding. Even the seed funding stage, there's not a lot, and I'm glad the Archangel Alliance is being stood up to help there. What I find interesting here is if you have $1 million of annual recurring income and you fit, the interest of some investors here, you can raise money. You can raise 10, 20, some folks may not know that you could raise 100 million plus here. But you have to be that far down the pike. And let's face it, it's something like 0.01%, I forget what the number is, of companies ever get to that stage. And if there's no funding to help move companies along before that stage, then they can't get there. And so that's where they have to go outside the state then to get the money. So it's very much a gap that we need to fill.
That's great feedback. Anybody else?
Yeah, I completely agree with Grace and James, what you're both saying. Getting to that $1 million ARR mark seems to be the holdup for a lot of companies. Most of the companies I work with are at that pre-seed seed stage, and they need the marketing dollars to get their name out to get there, or to grow the team. So I definitely see that as a holdup. And I think one solution, and I love seeing the SBA with how they do the capital access challenge, and something that we've been going after for some time now. But is educating investors about the venture asset class and how to look at it as an asset class, and how to mix venture in with their stock portfolio and their debt portfolio as well. And so I think it's about going to folks that we know qualify for credit, who could be accredited investors, and having educational programs to basically feed them into networks like the Archangel Alliance. So that's my 2 cents.
Oh, that's fantastic feedback. Grace, were you about to say something else?
Well, I was going to say, and this kind of feeds back to what Jensen was talking about earlier, and something that we've talked about. When you look at the accredited investor standards, I would love the opportunity to create a model where, we talked about diversifying your portfolio is so important, where we could create fund models where people could put in smaller amounts of money, not necessarily doing one-off investments, smaller amounts of money, those unaccredited investors, and dip their toe in the water. There's platforms like Republic that are out there that allow non-accredited investors to do investments like that and to look at individual companies. But I think at a more local level, I'd love to see an opportunity for us to be able to do angel investment. I hate to use the word philanthropy, but angel investment more as philanthropy. It's not necessarily viewed as an investment. It's investing in your community. And then at the end of the day, maybe potentially you get some money back out of it. So you're putting in a little bit. And then maybe at the end of the day, you see some returns, but it's a diversified portfolio of investments in a fund. And you're not having to go out and find 100 people that want to put 50,000, 100,000, $500,000 in. You could go out and crowdsource from Arkansas, because I think that there's quite a few people out there that want to invest, me being one of them, other people on the call I know being one of them, that are non-accredited investors that would put some money in to invest in local startups and to solve this problem. But because of the SEC accredited investor standards, we can't. And it's not, I don't think, an unsophisticated investor issue, because many of us coach entrepreneurs, we work with entrepreneurs, but we don't have the accreditation to be able to do it. And we might not have, honestly, the amount of capital to make a big, we couldn't chip away at the problem, but if you put a lot of us together, we could. And if you put a lot of us together, we'd be able to diversify a pretty good portfolio of companies probably to make some returns. So I would love to look at ways that the SEC can help peel some of that back to where that type of investing could be possible. So maybe not opening up SEC accredited investor standards to everybody, because I realize that that's a big nut to crack. But maybe looking at a fund model where it's forced diversification, and maybe it has to be administered. Maybe there's some certification around how it has to be administered and by whom. But I would love to look at something like that.
Grace, I know this is a simplification of what you're talking about, but it reminds me of like the Kiva Lending program in some ways, where you make $25 investments to, and the entrepreneurs that you support are, they're screened and, they're vetted and go through this process, and we give, I'm an investor because it's $25, which is a very palpable entry level, but also it's because it's individuals in my community that I believe in and know and support and want to, invest in a safe way that's more than me just like giving them $25 out of pocket. It sounds like, I know that's a very, 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 very scaled back and small and simplified model of what you're talking about, but conceptually it seems pretty similar.
Yes, and Morgan, like you're able to do that, but technically that's debt financing. So technically that's not even you getting to invest. You're not even getting a piece of the pie. That's just you lending money and getting that money back. So you're not even able to ever see any kind of return on that investment that you've made because you're not accredited. So you can't invest in that. So you're helping that company, but you can't get any money back out of it. The platform that I mentioned, the Republic, allows you to take a piece of that puzzle, but it's only a small piece. They've had to jump through quite a few hoops to be able to get that platform set up, and it's not local. And so you can make local communities. And so Becca Shaddix is working on creating a Republic Cities Arkansas group to help with that, really like pre-seed type of stage of funding on that platform. But I'd love to be able to create like more of a fund where we're investing directly in Arkansas-based companies with Arkansas dollars. And I know there's other states that would want to do that. So I've talked a lot, but.
No, Grace, what you're flagging with Republic, they're one of the registered portals for crowdfunding, this equity crowdfunding. And that is one of the pathways that unaccredited investors are able to use to invest in companies. So it is something that is accessible, but it is something that is, it comes because they're raising capital from unaccredited investors. There are more disclosures than you would have required by law in just a general private placement type of deal. So those companies, before they are listed on there, do have to put some filings together and get financials with different degrees of accounting involvement. Woo, the sun just really decided to come out of the cloud. But that's the portal that Grace is referring to. There's a couple of different ones that are out there that are FINRA registered and do provide an opportunity there for companies to raise capital locally, but it is not a local microfinancing equity tool like what you're talking about. But yeah, I love the ideas and the thought that you're putting to it, Grace, and would love to have follow-up conversations on that.
Yeah, absolutely. And with Republic, one of the downsides is there is quite a bit of fees incurred to that entrepreneur as well, which is another barrier to entry. And so for them to access that platform, there's no guarantee that they're going to get fully funded. There's no guarantee they're going to get funding out of that platform. And there's quite a bit of fees on top of what they have to do to be able to access that capital. And that's just not possible for that pre-seed that we're talking about. A lot of times they don't have, they're bootstrapping. They don't have the money it takes for that upfront cost. So I'll mic drop there and be done. So.
Well, this is amazing discussion, and I feel like I am ending it prematurely as it gets really, deep. But Director Miller and Commissioner Roisman, if there are follow-up questions or to continue this conversation, what is the best way to get in contact with your office?
Reach out directly to us. If you want to channel things, if you email smallbusiness@sec.gov, that's the easiest one to email. You will directly reach our team. It is not just some generic email box. It's actually on a computer that we monitor, and we can put you in touch with the right folks. So reach out to us, and we would love to hear from you and to have further conversations, because we very much so value your experience and your insights, because these rules need to work well wherever you're located, in particular if you are in the real SEC in the Southeast. Brought that joke back full circle. I wish everybody was unmuted so that I could hear how loud you're laughing at it.
You can drop the mic now. No, but thank you. I mean, Tiffany, you know how to reach each Martha and myself. Don't be shy. Again, if you take nothing else from this, we want to hear from you, and we really appreciate your ideas. I already have some things I wrote down today that I want to follow up. So again, I really want to just extend my thanks to you, Tiffany, for organizing this, for everyone who's participating in this call. And again, continue to discuss this with us. We're here to help, and we really, really, really want to get our rules right. So thank you again for this opportunity.
Agreed. Thank you all. And thank you, Tiffany and Miranda and everybody, for taking time out of your day to join us. We really appreciate it.
Thank you. Have a good afternoon, everyone.